What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. So I'm going to post a video today. I'll do a brief one tomorrow and Wednesday. I'm probably not going to post a video or Thursday. Friday, I probably will, and Saturday. But I just want to post one real quick. I'm going to show you these three dividend stocks that I'm buying. These are high yield dividend stocks. They have dividend hikes. One is a big risk, but I absolutely love these dividend stocks. And we're at almost at 9,000 subscribers on this YouTube channel. You guys have been incredible. So make sure you smash that like button. And you got to hit that notification bell because I said, sometimes I'll pump random videos out there. And if you have that notification bell on, you'll catch them. So let's check these stocks out right now. The first dividend stock is Arbor Realty Trust. It's a mortgage-backed real estate investment trust. It's sitting at 1766, has an 8.38% dividend yield, a PE ratio of 8.68. Market cap is 2.81 billion US dollars. Its year range was 1595 to 2074, and its day range was 1750 to 1768. So what do these guys do? So for close to 25 years, Uniondale, New York-based Arbor Realty Trust has helped multifamily and commercial real estate clients achieve their financial goals by focusing on growing long-term relationships and conducting businesses as not simply another real estate lender, but as a partner. We value our clients to such an extent that we are more comfortable calling them partners, and their relationships with Arbor are the foundation of their business. So again, the big thing with these guys are, and I've posted numerous videos on them, is mortgage-backed real estate investment trusts. You have to be very careful with them, and you have to study their revenue and their dividend history. And I'll show you why I am continuing to buy them on my M1 Finance Dividend Portfolio and even on my E-Trade Dividend Portfolio. So I have them in two portfolios, and I'll explain to you why, showing you their revenue and dividend history. And their revenue shows that there's growth, which is very important. This is in millions US dollars. 2014, 141, 2015, 142, 2016, 213, 2017, 346, 2018, 484, 2019, 535, and 2020, 603. So you're seeing an increase in revenue. So that's what I like about these guys. And they've actually done pretty well against the S&P, which is surprising as a mortgage-backed real estate investment trust, as I showed you previously. But what I like even more about these guys is their dividend hikes and their dividend history. And this is why I'm buying them like crazy. Check this out. And how can you say no to these guys? Look at these dividend hikes. 2014, 13 cents. 2015, 15 cents. 2016, 16 cents. 2017, 18 cents. 2018, 25 cents. Then you get that special dividend right here in 2018, right here at 15 cents. 27 cents, 28, 29, 30. Then it hit 37 cents. So this is 2022. It hit 37 cents. And go all the way to 2013 was 13 cents to 37 cents. Now, again, remember, with real estate investment trust, 90% of what they make, look at this, and there's their advertisement right there. 90% of what they make go back to investors. So this is a high yield dividend stock that I've been buying and I've been loading up on. And again, this is not financial advice for entertainment purposes, only disclaimer in the description, but I have been buying these guys. The revenue has me very confident in them, and I'm going to continue to buy. I think I'm going to get to 200 shares on my E-Trade Dividend Portfolio with them, and then M1 Finance just keep on buying them because their hikes are good, and I can buy more dividend stocks with their dividend income on my M1 Finance Dividend Portfolio. So that's kind of the goal. Is it's like a spinning wheel with a hamster on it. It's just going to start gearing in all cylinders once I start generating more revenue. And again, my goal is to get to $100,000 in my M1 Finance Dividend Portfolio. Maybe make another one. Who knows? But I like those high yield dividend stocks that are consistent with dividend hikes and revenue increases. Let's check out the next dividend stock. This one's a risky one. And this one's extremely risky, but I'm going to take the risk because of it's kind of a new kid on the block, and I'll explain to you why I'm buying it. AFC Gamma, it's sitting at 1811. Dividend yield is 12.15%, a PE ratio of 11.91, market cap 357.35 million US dollars. Its year range was 1790 to 2550. Its day range was 1795 to 1823, and its previous close was 1810. So what do I like about these guys? Again, this is what I really like about them. Advanced Flower Capital Gamma, AFCG Gamma, is a leading provider in institutional loans to high-quality Mary Jane companies nationwide in all aspects of production, cultivation, processing, and distribution. We offer loans and related facilities generally secured by our substantial assets such as real estate licenses and cash flow. With the years of combined lending expertise and real estate experience, AFC Gamma's principles are now focused on the exponential growth of the Mary Jane industry. So this is a specialized mortgage-backed real estate investment trust that focuses on the Mary Jane. Now, you saw how effective Innovative Industrial Properties has been as a REIT, an industrial real estate investment trust. These guys are a new kid on the block, and I'm very hesitant with buying Mary Jane stocks because they're so volatile. But this one, they're generating revenue, and again, you're giving out a loan, okay? You're expecting some money. You're expecting some money back. So, that's the important thing about these guys. And again, 90% of what they make come back to us. So let's go over their revenue and their dividend history. And again, these guys are so new, I had to do a lot of digging on them. Look at this. So let's look in depth with these guys. Earnings per share is up 1.28. Tangible book value 16.61. The sales 2.35. Operating profit 1.51. And look at this. The assets are going up. The total debt, okay, they're new kid on the block, big deal. Total expenses 5.94 million. Revenue or sales 14.4 million. So this is going up. This is what attracts me. Net income, not bad. Let's go to annual. So revenue of sales, the trend is going up. Now, sure, the expenses are going up. The gross, here's the profit. This is what attracts me. Gross margin, it's up 78.44. Operating margin 57.43. Pre-tax margin 54.51. Net margin 54.42. Return on assets 7.52. Return on capital 8.27. Free cash flow is up. So this is some of the things. Now, again, this is really new. So you have to be, this one, I mean, you have to really do your due diligence, but the earnings and estimates right here, that's going, I see positive numbers. Annual year ago, 1.28. The quarter year ago, 0.34. So there's trends that are going up. So I had to really do some digging, and I did post a video on their revenue slowly going up before. But I wanted to go a little bit in detail. And I'm going to show you their dividend history. Again, this is jumping up like crazy. So 2021, 38 cents right here, 43 cents, 50, 55. We have to be careful. This could be a yield trap. So this one, I'm really telling you guys to be careful with. I'm being very careful with this one, and you need to follow your due diligence. And I'm not giving financial advice for entertainment purposes, only disclaimer in the description. I'll repeat that 1,000 times because I have to. But this one, I feel, it's just studying the trends and diversification with a real estate investment trust and going into the Mary Jane field. I just think this one, you're going to get money. Okay, you have to get money. It's part of the law. And profitability, it seems to be going up. So I feel very confident in my decisions. Obviously, you saw what the BRICS rate, the tragedy of the BRICS rate, if you guys watched that over the weekend, that blew up in my face. But this one, again, is a publicly traded mortgage-backed REIT, and the dividend hikes are there. So I feel pretty confident with this one. Let's jump to the final dividend stock. And this one you guys revealed to me last week. You guys told me to do a review on these guys, and I really like them. I'm loading up with this stock as well on my M1 Finance Dividend Portfolio. Ready Capital Corp. It's sitting at 1534. Dividend yield at 10.95%. A PE ratio of 7.46. Volume 997.22. Market cap 1.76 billion. Its year range is 1324 to 1678. Day range is 1526 to 1539. Its previous close was 1532. So a lot of you guys that are new, I'll go over these guys real quick. And I'll summarize it very simple. Ready Capital is a multi-strategy real estate finance company that originates, acquires, finances, and services small to medium-sized commercial loans. We specialize in loans backed by commercial real estate, including agency, multifamily, investor, and bridge, as well as SBA 7 business loans. So that's one thing. Again, a mortgage-backed real estate investment trust you have to be careful with. So all three of them, they're MREITs, but you have to understand what they're about, their revenue and their dividend history. That's what sold me on this stock as well. Check this out. So this is what sold me on these guys. The revenue is doing so well. This is in millions US dollars, 92.94 in 2014, 2015, 148.955, 2016, 137.02, 2017, 138, 2018, 169, 2019, 229.916, 2020, 258.63. So 94 in 2014 to 258. That's very attractive. Now, everybody wants to say, well, NLY is a great one, but let me just show you the trends and their dividend history when I compare them to RC and these other ones. So people really love NLY, but, here's their revenue right here, okay, in millions US dollars. It's in the negative. Then 2015, it was up 1,135, 2,339, 2,808, then 2,279. This is before the pandemic. And then 2019, look at this hit, 912.583. Not even before the pandemic really hit. And then 2020, it hit 220.115. So I'll show you the dividend history on NLY and show you the dividend history of RC real quick. So we'll start with NLY. So here's the thing with NLY. So look, this is 40 cents, 35, then 30, then 26, then 30, then 7 cents, 30 cents, 25, 22. So it's been stuck at 22. Has a dividend yield of 13%. Now its revenue is not very attractive, but it's 22 cents and it's sitting at 675. Okay, but I just don't like the trends. Now there is a dip there. That's the one thing that these guys have on other people is the dip. PE ratio is 4.21. Annual dividend is 88 cents. So a lot of people like NLY because it's so down, but its revenue is not very attractive versus the other three, and its dividend trends aren't really growing. Now check out RC. But at one point, RC did have some bumps and bruises, but it is increasing its dividends and its revenue is going up. 2018 was 40 cents. 2020, pandemic hit 25 cents, then 30, then 35. Then it looked like it distributed a special dividend right here. Then it hit 42 cents and it's stuck at 42 cents. So there is a dividend hike right there. And this is why I like these guys and I've been buying them on my M1 Finance Dividend Portfolio. Annual dividends 168 and the PE ratio is 7.12 and the dividend yield is 10.97%. So let me know what you guys think of these three dividend stocks. Do you like them over NLY? Do you own NLY? You guys tell me. So again, NLY is very cheap. I have considered buying them because they're so low. I mean, it's $6. I mean, that's one thing versus AGNC and ARR. But I want to see dividend hikes. I like these three way better because of the hikes. And I want to know what you guys think. So again, if you are new to this channel, you got to subscribe. I'm posting one tomorrow. And you guys have been amazing. And you guys have a great Monday.